Existing home sales fell in the month of June by 5.4% nationally. But the median home price rose to its highest price ever recorded. When's it going to stop? Will this trend continue?
No, it's impossible. People have to realize the enormity of this bubble. There is not a comparable bubble in real estate. This is going to be worse than the crash before, and it's going to be way worse than the real estate crash in the Great Depression.
According to the National Association of Realtors, all 4 U.S. regions saw declines in sales, but yet the median home price rose.
Some housing industry watchers have been thinking that home prices will ease in the second half of the year, but so far it hasn't been the case, even as the supply of homes on the market finally increases.
Head scratcher, right? And it's today's topic. So grab a drink and your blood pressure medicine, because what's coming our way has never happened before.
This is a first in the world. Economists don't understand this because they think it's all politics. I don't study. You know how much time I spend studying politics? None. And all I can tell you, since there's no precedent for a bubble this big and this global, it's not going to end well.
So I was reading this article from the National Association of Realtors. Completed transactions that included single-family homes, townhomes, condominiums, and co-ops receded 5.4%. And sales are down in most of the country. Now, we haven't fallen off a cliff. Sales are just slowing. But if we look at what most economists are saying, including economist Harry Dent, there's a major shift coming our way.
All I know is this real estate bubble went higher and lasted longer than the first one. So there's no way it's not going to be a bigger crash. And again, I'm a chart guy. I like to look at a chart as if I don't know what it is first. And if I just looked at the real estate chart, it'd be a slam dunk. We had a 3-wave peak in 2006, a 4-wave bottom in 2012. Now in 2024, we're in a 5th wave peak, greatest single time a real estate bubble ever. And there's only one place this would crash to, the 2012 low.
Yes, even Lawrence Yun, that's the NAR's economist, who is always bullish, is starting to change his tune. He's quoted as saying that we are seeing a shift from a seller's market to a buyer's market. He's finally addressed the elephant in the room. Now, I've been in the real estate sector for 30 years, and I've spent 20 of it as a realtor, real estate broker. And if you've been here before, you know I don't sugarcoat much. But if you're new here, welcome. So I'm here to report that the tides are turning, even though it's a slow rolling wave. And if you're in the real estate business, it's painful. But when NAR starts to dust the sugar off of their publications, you should start to pay attention. And while the numbers don't lie, and yes, the median home price did rise, that's not the case for every single market. That's the nationwide median home price. If we start to dive into individual states and cities, you can't paint the entire market with the same brush. I mean, I can pull down a map on Florida, and yes, year over year, Florida went up 1.7%. Our median home price for June was $427,000. But if we, take a look at individual counties, that's not the case everywhere. So there are some cities with declining prices. That's my point. No matter how you spin it, sales are slowing and home sellers are starting to feel a bit uneasy. That's right. Prices are starting to dip and the tides are starting to change. And while the median home price did rise, it doesn't tell the whole story. And eventually, things are going to change. And it's not just my opinion.
And all I can tell you, since there's no precedent for a bubble this big and this global, it's not going to end well.
And with so much going on in our economy, from fuzzy math on the job numbers to businesses not meeting earnings and many of them filing bankruptcy, well, we are ripe for a crash. The question is when, how much, and how long will it take to reach the bottom? And the crash will not be isolated to just the housing market if what economist Harry Dent says, because the stock market is at all-time highs. And I've been watching the stock market and it is teetering. And if you know anything about technical charts, it looks like we're hitting resistance. And when that happens, it's going to start going the other way. People like Warren Buffett are hanging on to obscene amounts of cash right now. Also, I've noted that CEOs are now retiring all of a sudden, selling their stock. And you have to wonder, when powerful, well-connected people start heading for the exits, something's up. I'll pop a video about Warren at the end of this one. You should definitely watch it because he's displaying quite some bearish behavior. You know, real estate here in the United States has been extremely strong for the past 10 years. And once COVID hit, well, just accelerated. We had bidding wars, multiple offers, low inventory, was a complete feeding frenzy. A very unhealthy buying environment, stressful for not only the buyers, but if I'm being honest, the realtors as well. And while that's ended in most markets, there's still a few little pockets where they may have multiple offers, but for the most part, we have exited the feeding frenzy. Inventory is rising, mortgage rates are really high, and none of this is an ideal environment for sellers. And the fact that mortgage payments are double from what they were 3.5 years ago, that's just unrealistic for most people. Couple that with increased living expenses. I mean, your living expenses are up over 30% now with super high home prices, and the number of people who can't afford a home is increasing a great deal. Inventory is up 4.5% nationwide. Once that goes up another percent, well, we are headed into a buyer's market. But with so many people unable to afford these homes, the consequences of that will definitely be felt.
High housing prices, real estate prices, increase the cost of consumers living and business costs and government. And who owns more offices than governments? Okay, so this housing thing coming down is going to improve our long-term standard of living, but the government hadn't started intervening. They started taking over the economy in early 2009. That's when things changed, and now everything's perverted, and they cause. That's why this second bubble in stocks and more so in real estate, 100% artificial. It's not based on favorable demographics or productivity or anything else, and some of those things have been going up. It's just totally artificial. So it just means this bubble is more dangerous and is going to have to fall farther to get back into reality. And when that happens, you get this overnight, baby boomers lose and millennials win, especially the ones that didn't buy a home.
The rise of both the stock market and the housing market has gone along for quite a long time. It just continues to go up and up, and people are starting to get nervous. I mean, nobody has a crystal ball. The only way a correction doesn't happen is if, one, the current administration stays in office, continues to print money and alter economic data, and they are doing that. And God forbid that would happen. We're up to $35 trillion in debt. We're not collecting enough taxes to pay the interest on that $35 trillion worth of debt. And eventually, if this continues, the system will totally collapse. And that would be much worse than a stock market crash or a real estate crash. A total economic collapse of our monetary system, which would cause hyperinflation and the devaluation of our dollar. But make no mistake, regardless of who gets into office, a correction is coming.
No matter who's elected, the result or the trajectory of where we're headed, it will be the same?
No, I mean, I think it does matter in a sense that once we have the crisis, the way the government reacts to it is going to be very important. They can't stop it. They can't prevent it. But once it happens, they can make it a lot worse based on what they do. So in that respect, it's better to have, let's say, a guy like Trump than someone like Kamala Harris, at the helm of the ship after it hits the iceberg, right? I mean, we're gonna hit it. The only danger is that when we have the crisis, and if Trump is the president when it happens, the tendency is to say, aha, he caused it, right? Whoever is there when it blows up gets the blame. And so that is the risk. That's why it's like, well, gee, would it be better for everything to blow up while Biden was president so he gets the blame? But I think it's better if you have somebody who's more likely to do the right thing in the aftermath than somebody who probably has no chance of doing the right thing. So I think that Trump has a better chance of making correct decisions once the collapse is fully manifest itself.
Now, if I have to choose, I'll take the seismic correction. I'll pass on the total system collapse. I don't like hyperinflation a great deal. So I'll ask you, have you put any thought into what's going on? Do you worry about a stock market crash or a housing crash? I mean, we are at the top of the market. And if you are thinking about selling, timing is right about now, because if we do have a crash, obviously you'll be leaving a ton of money on the table. I found the economist, Mr. Dent, his advice interesting.
What would you say to those baby boomers right now?
Yeah, it's simple. Hunker down. We have lived through and created. We were the creators of the greatest boom in all of history. Don't look a gift horse in the mouth. And you're going to be the big winner if you do everything right now to sell all the financial assets you can, especially real estate and certainly stocks. Stocks and stuff. Get out of stocks. Don't hold out for the next 5 or 10% you might miss. Worry about the 50 to 80% that it comes so fast. You never get out in time, and you lose most of your net worth for a long, long period of time. So you sell financial assets. Examine everything you own. Real estate, you have to move the hardest on because it take the longest. Stocks, you can sell in a moment. Sell your stocks and work on selling your real estate you don't need. And if you want to keep one of your two houses, okay, again, pick the one with the most debt against it, which you may be able to negotiate out of some of that debt. This is a time to hunker down and just say, look, we've had the greatest times. You don't get great booms without growth, but don't listen to anybody that says soft landing after the greatest boom in history. It's impossible to have a great boom and then a tiny butt. Never, ever happens and shouldn't happen. This is going to be big when it happens. So all you got to do is get out of the way.
Well, whether you agree with him or not, if you're a baby boomer, your risk tolerance is very low and you probably have a lot on the line. I mean, nobody wants to lose what they've gained. And that's a personal decision as to what to do about that. So I'm not giving you any advice. Now, if you hold real estate and have a lot of equity, the clock is ticking. And I would have to say his advice there does hold some water, especially if you're looking to sell a big house and downsize. Take that cash. Thoughts? What do you think? I love reading your comments, so of course I'd like to know how you feel about this pending market crash. Will it come? I kind of think it needs to, but I don't make the decisions. So let it rip. I love reading your comments. Tell me what you think. The real estate market is at all-time highs, and it has been heavily influenced by extremely low mortgage rates for an extreme amount of time. And I think it may be time to pay the piper. All things point to a correction, crash, whatever you want to call it. It's coming. And if it doesn't, well, you'll wish that it did, because the alternative, I think, will be much worse. If home prices continue to stay high, it really does not help predominantly the middle class. employers will be forced to increase wages to keep up with the rest of the economy, which will, of course, increase taxes for the government. And maybe that's the plan. But when push comes to shove, I think most employers will find ways to cut the fat. Instead of increasing all of their wages, they'll start getting rid of employees. They'll use machine learning or outsource to other countries. I really do believe that society as a whole will suffer from these extremely high real estate prices. I don't think it's a healthy environment. That's just my opinion. Now, if you got some value out of this video, make sure to give it a thumbs up. I know I sound like a broken record every time I say that, but it does help me understand. One, if you like the video, tells YouTube to share it. And hit that subscribe button, because I would love to see your face here again. Now remember, stay informed, stay safe, and stay free. And watch this next upcoming video. Take care.